So this is a panel of 4 of the world's leading blockchain pure play funds, all 4 with a strong Asian presence. Dragonfly, Hashkey, and Summer Everest, which we have invested in over the years. And then Cygni, where Thomas France is normally in Europe, but is currently in Tokyo. And we're very excited to have all 4 of you with us today. Just because you're first on my screen, Michael Chen of Hashkey, could you introduce yourself, Hashkey, and then just give us your personal, how did you learn about blockchain and why did it excite you?
Hey, Matthew, thanks for inviting me to this panel, and hello to fellow panelists, Thomas, Hasib, and Harry. A privilege to be on this panel with some of the best investors in the world in the blockchain space. So my name is Michael Chen. I'm a partner at Hashkey Capital. I joined the firm at the beginning of 2021. Previously, I was in TradFi. I was with Man Group, a UK-based global hedge fund. And before that, I was with BNP Paribas. Hashkey Capital, 30 seconds version. Fund 1 was 2018, Fund 2, 2020, and we're investing out of our Fund 3 at the moment. The team is primarily based out of Singapore these days. We have a couple of people in the Los Angeles areas. Across our 3 funds, I think we've done about 300-ish portfolio companies, probably a bit more than that. And the core team has been investing in the blockchain space globally, all the way going back to 2015. I myself was, in the long short equity CTA world, and I just didn't find that too exciting, or there were too many funds doing exactly the same things. So in 2021, I joined Hashkey Capital. To be perfectly honest with you, when I first joined Hashkey Capital, I knew very little about blockchain and Web3 beyond I probably had a couple of Bitcoin in my eBay/Coinbase account back in the days. But it's been an exciting journey. It's been personally and professionally since I joined Hashkey Capital. So yeah, I'll just pause there, and I'm sure there'll be a lot of time to dive into a bit deeper.
Thank you very much, Michael. Hasib, you're next on my screen. Could you do the same, please?
Yeah, happy to. So I'm Hasib Qureshi. I'm one of the managing partners at Dragonfly, which is a global crypto venture fund. We've been investing in crypto since 2018. We've got a few $1 billion in AUM. We invest from very early stages all the way to, kind of post-token launch, I guess, sort of the equivalent of late-stage investing in crypto. So my story is a little bit too long to kind of fit in the margin here, but the short story of how I got into crypto, I was originally a software engineer at Airbnb. Ironically, I was working on the same team that Brian Armstrong was on when he left many years earlier. I think like 5 years earlier, he left the team I was working on, which is working on payments fraud, to go and start Coinbase. And I think there's something about payments fraud that gives you this very adversarial sense of how payments work and how the international payment systems works in particular, and specifically around how broken it is. And also not just how broken it is from the perspective of a company trying to pay people internationally, but also all the people who are trying to abuse the way in which the international payment system is set up, which is the business of anti-fraud. And I started to realize all the ways in which crypto was such a more elegant answer for the world that we actually live in today, which is a 24/7 international digital-first world, which is not the world through which the international payment system was really set up to resolve. And that was the kind of, the light turning on moment for me of why this crypto stuff made sense beyond just a way to pay people or, I don't know, buy drugs online, which, back in 2015, when I first came across this stuff, that's more or less what I thought it was. And then I realized what a bigger vision crypto and blockchain had for how human beings are going to be paying each other and how they're going to be settling, financial instruments in a digital world. And that's what got me excited to come into the space full time.
Fantastic. Thank you very much, Hasib. I didn't know that Airbnb was your alma mater, so that's very interesting.
That's right.
Yeah, it's the first time I've heard that. Thank you for that. Thomas, you're next on my screen, and obviously you have a somewhat different story to tell. So very interested if you would share that with everyone.
Sure. So thanks for having me here, first of all. And yeah, I've been so I'm a French American entrepreneur. I lived like the bulk of my early life in France, and did like a various number of startups. And stumbled into Bitcoin like sometimes in 2013. Previous startup was like trying to do like some kind of universal one-click payment system, and we had like to dig into like how like the banking system works, to have like some virtual credit cards, understanding like how our transactions are settled. And that's really when like stumbled into Bitcoin, and really realized like the ability to have like a very primitive contracts to be settled in a decentralized manner. That's really what's kind of struck me. And with my co-founder at the time, we started like a bunch of different projects in that field. One of them being like an actual physical place around Bitcoin, and a physical like broker dealer system in Paris. And the other one is Ledger, that I'm sure you know of, this little security device to make sure that your private keys are stored securely, and that you can sleep well at night, let's say. So that was like in 2014. I moved in San Francisco, where like at the time everything was happening there. Like I think 80% of the venture investment was made like not just in the US, but really like in Silicon Valley. And I've been like with Ledger in the US like for until 2019, when I left my operational roles. And I've always liked to invest, as well as in a major capacity to help scale that kind of 0 to 1 phase. And sometime in 2020, with my partner Nico, we started to raise some venture vehicle to invest along a thesis that is dear to us. It's a thesis around like what we call the future of trust, making investing in building blocks for better, more trustworthy technology, and that's a theme that encompasses like blockchain, AI, security, privacy tech, and helping Thrive like to have like new models of trust, less centralized, or like more auditable. And that's what we've been like doing over the last few years. Raised like two venture vehicles, investing along that thesis and that theme. And yeah, it was based like let's say bulk of the time in San Francisco, but I'm French with like a good network to European startup. And right now I'm based in Japan for the next couple of months.
Great. Thank you very much, Thomas. And just because some of the people on the line may not know what Ledger is, let me just say that it is probably one of maybe the world's leader in hardware storage and online storage of tokens and digital assets. I hope I'm doing it justice, Thomas. And we're investors and are investors in Ledger, which is today a pre-IPO unicorn. So thank you very much for creating it, Thomas. Henry, Summer Everest, would you do the same, please?
Hi, Matthew. Hi, everyone. Thanks for having me today. My name is Henry, managing partner of Summer Everest. First of all, congratulations to blockchain co-investors. A very successful event today. So Summer Everest is a Hong Kong-based blockchain VC, but we invest in global mandates. Our team has years of experience from Wall Street and private equity investment previously, before starting to invest in the crypto and blockchain space in 2018. So I previously was also working in Wall Street investment banks, looking at consumer technology and fintech, and I started to lead our investment arm in Summer Capital, which is the parent company of Summer Everest, investing in growth and early stage technology companies. In my previous job, when I look at some of the fintech and consumer tech players, there was excitement in terms of mass market and solving problems in the emerging market that cannot be served by the traditional banking or by the large tech company. So inclusive finance is very important. But however, we face the problem of centralized risk and the non-transparencies of the underlying assets. So when we were introduced to Bitcoin and blockchain in 2018, we got fascinated, and I personally think this is the next generation of fintech and new technology, where really there's infrastructure the economies and the consumers and the enterprises can globally benefit on a borderless way and a collaborative way. So I think we are very, very excited about the development of this industry going forward. And again, thanks for having me, and happy to share more in the panel. Thanks.
Great, thank you very much, Henry. So just as a kickoff, we've spent today talking about the different asset classes under blockchain, which range from public tokens and public equities back into early stage venture of the same tokens and equities. And I think all three of your firms are more early and mid stage than they are late and public companies, but there are variations in every firm. So I know some people have liquid trading strategies, some do not. So maybe we should just go around the table and you can sort of position your firm. What do you do and what don't you do? Just so that each of the people listening gets a sense of the center of gravity of each of the firms. So if you wouldn't mind, I'm going to shuffle the order, make sure everyone gets equal time. So this time around, I'll actually start with Henry. If you could just depict Summer Everest and where you play in the blockchain space.
Thank you. So our thesis is very simple, to invest in blockchain infrastructure and technology that can empower mass adoption and the real applications. So a lot of people know that token is a relatively liquid asset and easier for a lot of projects to exit in the early stage compared with traditional assets such as equity or other securities. However, we still take a long-term approach because we think this is a new technology, a new fintech that can really disrupt and empower more people. So we don't tend to do a short trade or flip of the token at the early stage. We still want to invest in early projects that have a high potential and then be with the founders on the long term. So I would say we do invest majority in the early venture stage of companies with a combination of equity and token, because token can allow assets or projects to capture liquidity at the best market window, but equity can capture the long-term value of a lot of projects, for example, in the fintech space, that can cross the different market cycles. So we tend to go long-term. Occasionally, we do strategic OTC deals with projects that's undervalued, but again, in the form of locked token, so that we do have a good structure and a long-term relationship with the founders and the projects.
Got it. Thank you, Henry. Hasib, what's the center of gravity of Dragonfly?
So we invest mostly kind of seed, Series A, and some small amount of Series B. Check size ranges anywhere from 3 million on the low side to 30 million on the high side. We tend to lead most deals that we invest in, and we invest into both in the East and in the West. So we have an office in Singapore as well as an office in New York City. We tend to invest mostly in kind of core technology, infrastructure, DeFi, consumer type crypto applications. Less so on certain areas like hardware, mining. But we tend to be pretty broad in our mandate.
Great, thank you very much, Hasib. Thomas, Cygni?
So the type of investment we've made, like with Cygni, is mostly early stage, mostly equity, around the thesis that I mentioned. And generally we tend to, like, there's different themes all the time, like around like infrastructure, tooling, application. We've invested like in all fronts, but we've got like some kind of natural bias around like infrastructure. But all the investment we make, so I say predominantly like in equity, always kind of a long term to like through the cycles with like a very long-term approach and the ability to reinvest through like over the years in the companies we think are the winners.
Great, and thank you very much, Thomas. And Michael, I know that you do have other things going on at Hashkey, so maybe you can try and answer this question as well.
Yeah, I mean, our venture fund, you know, given our fund size, just under 500 million, I would say we'll probably look at, you know, most of the stuff that's available for investors to look at it, you know, within blockchain. Our check size, I think, is a little bit smaller than what Hashkey mentioned in Dragonfly. I think we probably go 1 million to 3 million is probably typically our range. I would say, you know, CFI, DeFi type, you know, it comes in a lot in the portfolio companies, followed by, you know, we might call enterprise. You know, that might include example like security, you know, on-chain data analytics. I think we wouldn't do as much consumer type of applications probably as we like, and hopefully, you know, if the current, you know, market momentum sustain, you know, we'll revisit that. And that's sort of typically sort of the ranking or the order. You know, the team, you know, I would say there's definitely part of the team who are, you know, very, you know, technology savvy, right? They get into pretty details of the MVVs and intent and all that. And there's part of the team who, you know, with more TradFi background will look at, you know, your typical institutional service provider. So I think it's a nice mix. And yeah, and thanks for Matthew pointing out. So, you know, our core venture fund is sort of what we're mostly known for, particularly in the East. With our Hong Kong Type 9 license, you know, we recently launched, you know, a couple of liquid strategies, including discretionary managed long only, and we worked with, we team up with Russell FTSE to launch a couple of indices, and there will be a couple of passive index funds, you know, coming along the pipeline as well. So that's a separate, but you know, we work together, but a separate dedicated team that manage a small, hopefully growing liquid token strategies, you know, designed just like a US dollar hedge fund, that sort of things. Yeah, so that's sort of where we are.
Great, thank you, Michael. We're getting a lot of questions coming in, so I'll try and integrate some of them. Obviously, we're here for the investors, so what they're asking, I need to make sure we're asking you guys. I think your expertise, all four of you, is already coming through, but we have a question here, which is, you know, traditional venture firms don't seem to have had much success, and we know some of them came into the space and then exited in the downturn in the last 18 months. What's your view on that? How different is blockchain venture investing, and what unique skills do you need that maybe a generalist venture capitalist wouldn't have? And I'll take popcorn style, so anyone who wants to take that can go first.
Sure, I can jump in. So generalist investors were probably most of the capital that got burned at the height of the last market. So, you know, if you look at the FTX cap table, was mostly generalists in that last couple rounds. If you look at, you know, the big blowups like the Celsiuses and these kinds of things, these were not people who were crypto specialists who were putting most of the money in these firms. And so I think from the perspective of founders, I think there's increasingly an adverse selection against generalist VCs, in large part because they realize that generalist VCs, they essentially come into the space when the market is extremely hot. So they came in 2017, they came in again in 2021, and then they leave as fast as they came when they realize that, hey, we don't really know what we're doing. We're not really making good investments. We're not really actually understanding how protocols or companies are actually set up for success. And that ends up earning them this reputation that they're sort of fair weather friends, and they're not necessarily reliable partners for founders in the crypto industry. So you've seen this retrenchment that now, even though a lot of the generalist VCs are starting to come back, they're not necessarily winning deals against the crypto native VCs because founders realize like, hey, you guys don't actually understand crypto. You guys don't have the ability to actually support portfolio companies. You don't have other portfolio companies that you can help me partner with. There's all these reasons why, as a founder, you realize that, hey, I'd rather work with somebody who really understands the industry rather than just a brand name that doesn't have the expertise to help me on the ground.
Right. Thank you, Steve. A very good answer. Does anyone else want to build on that? We don't all have to answer every question, but yeah, Thomas?
Yeah, well, I guess like Steve is straight to the point, and in crypto in general, there will always be this kind of ups and downs, and generally like the the worst time to invest is when like things are getting crazy, where like the crazy you are, the smarter you look. And also like a lot of people like can show momentum in these bull markets, whether it be like on the actual metrics or just like on the momentum of the fundraising. So there's a lot of way to build momentum and kind of attract capital in that way. When generally like the best time to invest obviously is during the downturns, when there's less noise and the people like the opportunistic people that have joined during the bull markets are just like slowly starting to get away, and only the most committed are staying. So I guess it's in a way it's good like for generous VC to enter during this bull market, because there's always it's always a good time to join, like on the 10-20 years horizon. But the key is to just like stay, be committed, and start to build like knowledge in that space, and some genuine like kind of interest, and not just the interest on some of the early potentially fake momentum, but like on the actual technology. Invest on that in the downturn, so that you can be there like afterwards, when for the next 10-20 years. Some people do it, some people don't. Some people get burned, and when you get burned, then yeah, you've got some scar tissue for quite a long time. So that's why like for sure, like when you're actually more native and committed to it, well, definitely you have like somewhat of a better understanding of the space.
Great, thank you, Thomas. I'm going to ask Henry a question, because I think I know Summer is obviously a very large private equity firm in Asia, and there's a question about Asian institutional investors. Are they, there is a bit of a perception, perhaps amongst some investors, that Asian investors are more interested in tokens. And is that true? So for the Asian institutional investors that you serve, how are they responding to blockchain, and what parts of it are they most interested in?
Yeah, thanks for the question. I think there's definitely a strong interest from the Asian investor base, whether it's institutional investors or family office type investors, continuously allocating assets from the traditional asset space into the digital asset space in general. Just to echo some of the earlier pages that Mitchell was showing in your deck, because obviously that has been one of the best performing asset classes, and it has its own intrinsic and fundamental values that serves as a diversification against the other asset classes. This industry is still at its early stage. So although we've experienced 3-4 cycles of the blockchain industries, we still think this is at the early stage, and many Asian investors treat this as a new technology sectors, or the fintech sectors, which they see a strong growing momentum. As you know, in Asia, there have been many big unicorn companies from the Web2 or the traditional technology space, in the social, in the e-commerce, in the gaming, etc. And there's definitely a lot of consumer interest crying for new technology, new products. So the user base is here. That's what's driving the interest and the investment thesis of the blockchain space as well in here. So for us, some Everest, we actually focus on more application-driven blockchain projects or even infrastructures. And this is a trend that we're seeing happening after experiencing a few cycles of we call it proof of concept for the blockchain infrastructure on the layer 1s and layer 2s. Now they start to think of what types of end users and the markets that they can serve well, and what are the products or business model that can serve the consumers or the enterprises better, more efficiently, more and with a higher value than the traditional Web2 model. So this is how the investors, and particularly institutional investors, look at this space.
Great, thank you. And of course, I know Hashkey and Dragonfly, you also have regional, large-scale institutional investors in your funds. Is there anything particular they're asking you to focus on or give them that might be different from what the institutional folks in the US and Europe are looking for? Is it just diversified blockchain exposure, or do you hear particular themes from them?
I'd say from our end, not really. I think people are looking ultimately, and kind of we say our mandate is that we invest globally, and we try to find the best risk-adjusted opportunities wherever they are in the world. So sometimes they're in Asia, sometimes they're in the US. We don't really take a view per se. We're just evaluating individual investment opportunities, but we don't try to index. We don't say, okay, 50% comes from here, 50% comes from there. And I think in general, that tends to be a pretty poor strategy. Crypto is an industry that rewards you for being quick on your feet and adapting to what's happening, because if you start a fund and then you have a 3-year investment period and you say, well, I'm going to invest this much of it in this, and as a year and a half goes by and the industry totally changes and the regulatory picture changes and what's happening in different countries changes, I think it's a fool's errand to try to decide on these things in advance, as opposed to using your judgment as an investor to find the best risk-adjusted return.
Great, thank you. Oh, that's a great
Yeah,
answer. Yeah, Michael, please.
Yeah, to echo that, I mean, agreed 100%. I think our job is at its core is early stage VC investors, right? We're trying to identify projects, teams, and companies that hopefully will be able to grow and scale sort of when the next bull market comes. So our job is really, I think, to identify the right team, the right verticals to back, let's say 6, 8, 12 months ahead of the the curve, so to speak. So that's the mandate, and we're trying to source globally or wherever opportunities arise. Whether they are in Israel or they are a team in Australia or they're anywhere, and our investor base would agree and to that as well.
So given what you both just said, there's another question, which is, what are the differences? Is Asian venture in blockchain different from the US and Europe, and if so, how? No one wants to take it? Well, you've already said
I can speak to that.
Yes, please, Hashkey.
Yeah. So Asia is certainly different. I think the way in which deals are structured is a little bit different. So, I mean, that's kind of minutia. I'd say that the aggregate, if you zoom way out, what tends to look different between Asia and the US? One, Asia tends to focus a lot more on applications and CeFi, whereas the US tends to focus more on infrastructure, kind of core technology type innovation. It tends to be the case that if you look at what are the big winners in each sector, in Asia, the biggest winners are exchanges, and in the US, the biggest winners are the protocols. So if you take the 1,000-foot view, probably if you're investing in Asia, you want to have exposure to exchanges. If you're investing in the US, you want to have exposure to protocols.
Great, thank you, Hashkey. Anyone else want to build on that? Yes.
But I guess you definitely need to have like some specific expertise for Asia, and for example for us, like even though I'm in Japan right now, but we spend like the bulk of the time like in Europe, and our focus was again in the US and Europe. That was our 2 main focus. In Asia, we have been seeing some deals, but we didn't have like any kind of specific hedge that kind of gave us this edge to be investing in Asia. So we kind of limited the type of investment we did, like over the funds or even like personally, just because like you need to have like again this presence. There's some very specific type of themes that would be happening there, and absolutely need to have like a real effective trusted network in that region to be able to access some of the best deals.
Okay, thank you. So I just want to play devil's advocate a little bit. In old-fashioned venture, some of the firms tried to build global venture firms. Sequoia, obviously famously expanded at one point and was very successful on both sides of the Pacific, but with different teams and different funds. Draper Jurvetson tried to and didn't really succeed. And said, we think venture is actually a local business, so we're going to retrench. I think Kleiner did something similar. So just playing devil's advocate, is venture a global business, or do you have to be local to get the best teams and the best opportunities?
I think, yeah. Oh, I'm sorry.
Go ahead.
Henry, do you want to speak first?
Yeah.
Okay. So it's a question that we get asked a lot because we kind of brand ourselves as being a very global firm, and we have this big presence both in the US and in Asia. I would say The answer is, I think the answer is a little bit of both. Venture kind of is a local business. And so if you want to do a local business globally, you have to be global. Like you have to actually have a deep understanding of what's going on in multiple geos. And I think it's really hard. Part of the answer is that if you want to do what we do, you have to work a lot. You don't really get to have the kind of the genteel, take summer vacations, not work too late type of venture lifestyle. Sort of means that you are basically living this job 24/7 because that is when, as a team, the whole team reports to me, and that means I'm managing people both in the U.S. and in Asia, which more or less means that I'm on call all the time, and that kind of intensity, I think, is part of. I've sort of realized over time the intensity of that is a lot of what ends up deterring many firms from trying to do the strategy because you can't just run venture as a local business and you can do fine doing that. The second thing is I think the sense in which venture is a local business in crypto, the localness is Twitter. That's the sense in which like everybody who we invest into lives on Twitter. And that is kind of the global commons that even somebody who lives in Singapore or lives in Vietnam or lives in Western Europe or Australia or wherever they are, their first home is the internet. And as a result, everyone kind of speaks the same language. Everyone's talking about the same things. Everyone's included in the same conversations. And so when we get on a call with somebody, usually whether they're in Asia or in the US, they're a part of that same global culture. And that's the way in which I think crypto venture can kind of function differently than, for example, if we were investing into, Uber for Malaysia, I don't know that you could do that in the same way that you can invest into the next DeFi protocol coming out of Malaysia.
Right. Yes, thank you. It strikes me.
Yeah.
Please, Henry. Yes, go on, Henry.
Yeah, sorry, I just want to add on, and I agree 100% with what Hasib said, because I think what's fascinating about the blockchain industry is it's a borderless industry. I think although the founding team may be located in certain place, or the company or the project may be incorporated in certain place, but really the business model and the addressable market is really a global market. So, and also the crypto is trading 24/7. So for us as a venture fund, we do have to work almost 24/7 because that's where the market is. And I think we also travel around globally, although our team are originally based in Hong Kong. We have to meet different people because you have to understand the full value chain of each of the business model, which is geographically located at different places, but they are all closely correlated or talking to each other. So I think I agree. I like the analogy Hasib mentions that the local is really on Twitter. I totally agree. There's really no differentiation on which country the team is or this company is. Once everything is on blockchain, then we all live on blockchain, and there's no time zone difference. Yeah. So we do have to meet teams and working around the clock, around the different time zones. Yeah.
Great, thank you very much, Henry. Michael, I want to ask you to go first on the next question. Hashkey is part of the Wangsheng group, and I know that one of your leaders also sits, I believe, on the Hong Kong digital asset decision-making group. There's a message. We just published our digital finance adoption report where we looked at the top 50 asset managers in the world and the degree to which they're already live with digital wallets, digital custody, digital monies, stable coins, etc. And it was a bit surprising how many of them are a lot further ahead than you might realize. But we had in there the Chinese banks, and we had been told that all the Chinese banks are offering eCNY and the digital wallet to facilitate that. The Chinese government had asked them to all participate in that program. And so I guess the question I want to ask, because most of our investors are and the people that watch this are actually going to be in the US and Europe, is that true? How far ahead is China? Is the digital yuan really a reality? What's your view, Michael, on that topic?
Yeah, I can't say I'm an expert on central bank digital currency, but I think generally speaking, the sense is that because in Asia and particularly in China, you have the super apps like the Alipay or the WeChat are so advanced and so market dominant, right? And essentially, just like the Venmo in the US, right? I mean, here it is actually become a cashless society, primarily in China, a big part of Hong Kong, Singapore, and other parts as well. So I think these super apps or traditional digital payment intermediaries are probably dominate 95% of the market. So I guess the central bank digital currency or some of the stable coins, right? I mean, are not really, I would say, as prevalent or as popular as the narratives might suggest. So yeah, I think to answer particularly that question, that's sort of where we are right now in terms of that adoption.
Okay, thanks, Michael. Anyone want to add to that in terms of sort of insights you might have into China and adoption and progress that may be different from the conventional wisdom out in other parts of the world?
Yeah, maybe I would like to highlight as well about what Hong Kong has been really pushing for in the past 2 years. As you know, a large part of China Web3 community is now based in Hong Kong or growing in Hong Kong. I think over the course of the last 2 years, even during the downturn caused by certain black swan events in the crypto industry, the government and the regulators of Hong Kong was super progressive in terms of pushing out different type of licensing regimes to allow legitimate or good players in the crypto space, Hashkey included, who has got different type of virtual asset or crypto licenses across asset management, crypto exchanges, and others. I think we have a very, very comprehensive regulatory regime here supporting the institutionalization and even the healthy retail adoption environment in the digital asset space. In Hong Kong, we expect to have licensing regime on stablecoin, on digital custody, even on OTC later of the year, hopefully in Hong Kong. So I think that is serve as an extension of, I would say, Greater China markets, intent or adoption into the digital asset space, willingness to kind of collaborate and enter into the Web space in the way that it's not disrupting any monetary policies within China, including the renminbi currency. But we are seeing the digital asset adoption is being promoted and supported by at least by Hong Kong regulators. Yeah.
Great, thank you. Thomas or Haseeb, do you want to add anything? No.
The only thing I would add is that I think central bank digital currencies, although they get a lot of attention in intellectual circles, I think they are a little bit of a red herring when it comes to really understanding what's happening with blockchain and crypto. So if you take the ECNY, which is the Chinese central bank digital currency, it's a blockchain in name only. So the actual ECNY, there are no blocks, there are no chains, there's no smart contracts, there's no permissionlessness, there's no decentralization. There's really nothing that you would actually think that would be implied by the name that this is a quote unquote central bank digital currency. It really is just an alternative database system for the PBOC. And most of the time when you see the rhetoric around central bank digital currencies, there's all this chest thumping about how this is going to display stable coins or this is going to be an alternative to, commercial bank currency or something like that. The reality is that every single serious application of a central bank digital currency is effectively a very close permutation of what already existed. There's nowhere near the level of innovation that you see in public blockchains that's taking place on these kinds of, public sector attempts at building quote unquote central bank digital currencies. The reality, of course, is that all these central bank ledgers are already digital. It's kind of a misnomer to call this, okay, this is a central bank digital currency as opposed to what came before, which was running on a COBOL database as opposed to a newfangled cryptographic database. But the reality is the features that make blockchains unique and uniquely powerful are not present in any of the central bank digital currencies. And that's why you see a lot of, sound and fury and not much in the way of adoption or any unique applications that are enabled by any of these central bank digital currencies.
That's great. Thank you, Haseeb, for making that point. I'm only going to ask the four of you two more questions. We've got about 6 minutes left. The first one can be a short one, perhaps, but it has to do with the killer apps. The killer apps in Asia. I think Haseeb just mentioned the other side of the coin, which is maybe CBDCs are not everything that we're hearing. But on the other side of the coin, there are some things where Asia is way ahead, I'm absolutely sure. And I'd like you just to name some of the things that you say in the field of blockchain. Asia has moved very, very fast. These things are real and substantial. Don't feel the need to explain them necessarily, but let's at least name them. What are some of those things? And anyone can go. I'll go. Tether on Tron. It's remarkable to me just how much Tether is being used around the world, more than 100 billion issued. And it's my belief a lot of that is being used in Asia. And it's being used for many reasons: efficient, real-time, low-cost payments. And it's big. It is definitely real. You can't ignore it. So I named one. You guys can argue if you don't agree with that one, but are there any others?
Yeah, and it's to build on this one, like it's something I was very, very surprised in, like in some Asian country when talking about like what were some of the most exciting use cases around Bitcoin, around crypto. Was it Bitcoin? How Bitcoin was big in these countries? It was really about like, yeah, USDT, and on Tron, potentially on some other like fees type of chain. That's something where people like have a real need to access like the USD or a USD type of asset, and definitely like I was also very, very surprised by like the prevalence of USDT, not only on Tron but USDT in general. That was something very, 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 very shocking.
Any others?
Yeah, maybe I can add on that as Henry. Yeah, I think I would like to generally describe a particular use case in a sector or business segment, which is real asset tokenization. I know the industry has seen this as a kind of a hot topic or keyword in the past year and a half. But it is actually very real and a very meaningful use case here in Asia. And I think it's even beyond Asia, across all the emerging markets, because it is solving the real problem for those populations, SMEs, or consumers in certain markets that's underserved by the traditional banking system, either because they don't have access to the banks, or they actually don't have they have a very high cost of doing transactions. So I believe once the traditional assets, not just T-bills, but for example, receivable financing, for example, consumer loans, for example, all types of other traditional assets that's going on-chain, it will make the cross-border transactions, investment, and all types of financial service requirement to be seamless and available 24/7 in a very low cost manner. And related to that is actually you mentioned Tether, but I would say stablecoin is actually in everybody's daily life right now in Asia for a lot of enterprises, for a lot of small businesses, because a lot of markets in Asia have big import-export trade volumes, and they they have been suffering from the traditional banking model in the past. So we are seeing a lot of adoptions to doing the cross-border payments in the form of a stablecoin, and sometimes there's more on-ramping requirement than off-ramping, because we see a lot of end use cases from the merchants even accepting stablecoins. That is why we're seeing many of the Asia financial jurisdictions are promoting the native currency-backed stablecoin to be available to their local markets, and to be hopefully join force with the existing ones like US dollar-based stablecoin or other native stablecoin issued by certain private enterprises, for example, PayPal and other companies. So I think this is a very strong trend. I would say a stablecoin and real asset tokenization are in the same category, and it's the two sides of a coin, which is really facilitates the inclusive finance in many industries and markets.
Thank you. I'm going to ask one last question. I'll start with Michael, but I'll go through all of you. If you could try and keep it to 30 seconds or less. The preamble is, back in the day, most US institutions had no Asia exposure, and all of a sudden they decided they needed it. And I remember Melissa Ma, who was a friend of ours, launched something called Asia Alternatives at that time. And she had a very clear articulation of how she could give Asian exposure in private equity and private investing. She accumulated, I think, $10 billion assets under management in a pretty short time. Now, I know it was a lot more complicated than I'm making it sound, but the question for each of you, just to wrap up this panel, is what would be your elevator pitch? Why does a US or European institutional investor or family office or RIA, why should they have exposure to blockchain in Asia? Michael, can you go first, and then we'll just go down the line.
Yeah, I feel like there's nuanced, complex question requires nuanced, complex answers. And to be perfectly honest with you, I typically don't like the East-West sort of narratives that much. And again, I reiterate, I do think crypto is global in scope. People ask, where your most of your portfolio companies, I would say Cayman Island, right? So, but joking aside, I would say, last 3, 4, 5 years have been building hardcore blockchain infrastructures. And I think a lot of those original thinkings are coming out of the US, your PhDs out of UCLA. Hopefully the next 3, 5 years will be consumer applications. And once you reach the consumer applications, you might see, like the internet age, right? You have the Amazon in the US, you have the Alibaba in Asia, in China. And then maybe at that point, there'll be a lot more interesting, I think stuff to invest and generate returns for investors. So I would say, just on the lookout for consumer applications in the blockchain space. And if there is consumer applications, we strongly believe there will be. I think Asia, due to its population and so on and so forth, might have a lot of interesting apps, so to speak. And at that point, a global crypto investment firms with a strong Asia team on the ground and an understanding of consumers might able to capture a lot of opportunities that, if you're just sitting in Menlo Park and that's nowhere else, may not capture. So I'll just say that.
Thank you, Michael.
So I guess it depends on the level of sophistication of the investor and maturity with the blockchain space. Like 101 would be just to buy Bitcoin. You've got this exposure to blockchain in a way, then you can just go through a fund of fund that is going to make some different investment in different managers to get a broader space. Or if you want to have this function in a house and you want to cherry pick the right type of investors, then yeah, you want to have a different type of managers for different type of geographies, sectors, themes, etc. So yes, it's important, and it really depends on the maturity of the investor in regards to that asset class.
Thanks, Thomas. Henry, would you go next?
Yeah, I think without repeating the other two panelists, I think I would say yes, blockchain projects are not bounded by certain markets. However, in Asia, there are a large end user markets, where they talk about consumer apps, or if they talk about the DeFi, if they talk about building applications on top of infrastructure. So that's where most of the Web3 or blockchain projects will focus on in terms of building their business model or in terms of their go-to-market strategies. So I would say coming to Asia is not necessarily meaning you invest in only teams that's originated from Asia. However, this helps you to understand the mass adoption roadmap and the technology innovation required for the blockchain infrastructure. Because at the end of the day, we built the blockchain to serve the users, to serve the business models. So I think this is why this market will become more and more important, and all the best projects will definitely not miss out having presence in Asia.
Thank you, Henry. And Hasib, bring us home, get us all excited. By the way, Hasib has a fantastic show online. I listen to it every day that I can. So finish us with a flourish, Hasib.
Yeah, I'll say very simply, crypto is a global phenomenon. And I think in order to invest in a global phenomenon, you have to be able to see the whole elephant, which is why I encourage everybody to have at least some perspective of what's going on globally outside of the US. If you walk away wondering who's using this stuff, the people here on this panel, we know who's using this stuff.
Great. Thank you very much, Hasib. So I want to thank the four of you. This was a big commitment of your time. I know that this will be watched by many, many investors. Not all of them in Europe, for example, wanted to stay up this late. But thank you so much for joining us. And we look forward to continuing to be investors in all of your funds. And we encourage other people to do the same. So thank you very much. Philip, could you turn off the recording?